Hello everybody, welcome to TraderMerlin Show for your January 31st edition, the final show of the month of January. And yes, I see a lot of you enjoying the football playoffs as much as I enjoyed them. Obviously, watching my 49ers lose didn't really do it justice, but it's funny how I always try to tie things back to trading and investing. So for anybody who was watching the game, you might understand this one. For those that don't, it may not be, noteworthy to you, but in everything we do as traders and investors, there's a plan. There's a course of attack. And when you got a winning trade, you add to winning positions, etc. When you have a losing trade, you put a stop loss on. With 6 minutes left in the 49ers game versus the Los Angeles Rams, and by the way, congratulations to the Los Angeles Rams. Appreciate it. They played a great game, and how do you not cover Cooper Kupp that much? Anyway, with 6 minutes left in the game, the Niners were tied with the Los Angeles Rams. And I texted a whole bunch of my friends and said, this is exactly where the 49ers want to be. You have 6 minutes left, and if you run the ball and grind up the clock, meaning when you run the ball, the clock keeps running. If you pass it and it's incomplete, the clock stops, so you need to get that clock running. I said, we are perfectly where we need to be because you run the ball down the field, get a few first downs, you get to field goal range with a few seconds left, you kick it, you win the game. And this is where I question play calling. And again, the reason I'm saying this is it's a parallel to what we do as traders and investors is we have to make our own calls and call our own shots on every single trade that we make. And for the life of me, I don't know why, but the 49ers decided to do 3 straight passes, all of which were incomplete, which took a total of like 30 seconds off the clock. So now all of a sudden you give the Rams the ball back with plenty of time to do exactly what the Niners should have done and ultimately ended up winning the game. So cheers to the Rams for winning, and shame on you for the Niners on some absolutely horrible play calling at the end. But it's okay. Considering we were 3-5 at the beginning of the season, we fought back and made it to the second to the last game. We'll see you guys next year. And it's tough. I don't know who to cheers for. I'm either going to cheers for the Rams because I'm a huge fan of Matthew Stafford and feel he deserves to win a Super Bowl at some point. But I'm also a big fan of Cincy. These guys have never been there before. Well, they've been there one time in their history, and of course they lost to who? San Francisco 49ers, beat them in 1982. Anyway, I'll move away from the sports talk and get to the topic du jour, which I had a little fun building this sign, or I guess the thumbnail sign, whatever you call it. It says, as goes January, so goes the rest of the year. And I've got a whole bunch of like thorns in the background because I just thought that was a good analogy for what would happen this year. Looks to me like it's going to be a rather thorny one, meaning we're going to have all kinds of weird little whips. And yes, Glenn, goodbye Jimmy G. Even though he got us to the playoffs, bye-bye. I'm done with that guy. Move on. So this was started because of a comment, a send-in, a question, if you will, from one of our regulars here, who usually is the first one in the group. He was actually first today. Hailing from Cape Canaveral, Florida, Les sent in this. And he says, I was wondering about the January effect. How goes January, so goes the year, or as goes January, so whatever the phrase may be. I looked at the last 8 years and found that it worked 3 times, but didn't work 5 times, 2014 to 2021. It didn't work in 2014, 16, 18, 20, and 21. Is this an effect or just random selection? Okay, well, remember, everything works until it doesn't. That's obviously the easy phrase to remember, but you have to also remember that since 2009, we have been in nothing but bull markets, right? You had that one little month and a half window of sell-off that happened in 2020, which certainly could have modified that year's results. But all in all, it was in an uptrend. So when we get a mantra like this, which says, as goes January, so goes the rest of the year, normally it's really going to be important to understand what the trend of the overall market is. Now, what's interesting is this is really, in my opinion, one of the first times in the last 12 where you've had already signs going through November and December that there's at least a little bit of weakness in the market, right? And then all of a sudden, January, you start to see it take a little bit more of an impact. It doesn't mean anything is over, but I do like the mantra because it does hold up in bear markets. If you're in a market that's trending down, well, if January is down, most likely that trend will continue. So I thought it might be interesting to look at what the actual ending numbers were. Now, I know we're going to get some owls in the crowd who are like, hey, you can't use those numbers. I'm using the ETFs like SPY, IWM. I'm using the gold futures, oil futures. And what I'm targeting is from where we opened January 1st to where we closed today on those markets. And here's the numbers that that we got. Now, let me see if I can bring this up for you. I thought I had it all set and ready to go. Oh, I guess I got the wrong thing. There There we go. This is the chart I wanted to show you guys. This is January's performance. You can see at the bottom, Bitcoin just getting absolutely crushed down. I'll keep moving. 18.55%. Now, of course, we know that one's volatile, but the Russell was down 10.06, NASDAQ down 9.08, S&P down 5.59%, Dow Jones Industrial Average down 3.67, gold, it shouldn't be green, it's down 1.76, and then all of a sudden oil, hello, I decided to go the opposite direction. Oil for the month up 16.8%, one heck of a month for oil, and that's continuing on a really strong December as well. So nice to see at least somebody was positive out there. Now, it begs the question, does this reflect a negative market and mean that you're going to see a down year because the Dow, S&P, NASDAQ, and Russell are all down? Normally, I would say, no, it really depends on what the market gives you, right? I think everybody just, you know that. At this point, it's all about what the market gives you. However, we talked about this last week where I said, I think it was Tom's question about are there any like signs or characteristics of market sell-offs that are commonplace? And while I don't think that there's anything that's always 100%, I do think you generally get a sell-off in order, which is if it's tanking, markets are dropping quick, it's usually Russell is the worst, followed by the NASDAQ, followed by the S&P, followed by the Dow. And for the month of January, we had all those ducks in a row. Now, keep in mind also, these lows were significantly higher than this. I believe at one point in the NASDAQ, we were down somewhere around 14, 15%. I can actually bring that one up for us if we want. And I will do that right now. Let me bring up the triple Qs just to see what we were officially down on a monthly, just for fun, because it was a great bounce the last couple of days. Look at this candle. That is an ugly candle. It basically erased, if this is a monthly, it erased 1, 2, 3, 4, 5 months worth of gains in 1 month. Gotta love that. So all in all, if we go from where we opened up to the bottom here, which is right about there, you're 16.24% off, right? That is obviously a pretty ugly slide for a month, but all in all, only finishing down 9, not too shabby. Hey, Don, good to see you. Yeah, Grandpa Don. I'm older than you, buddy. Deal with it. Hey, sorry for your Chiefs, man. I guess we were both in misery today on that one. That was a tough loss, but great job by Cincy. So what does it mean? Does it mean that this is going to turn into a market rout? Well, today the markets did something which I was anticipating. If I say the word expecting, that sounds a little too cocky, but I was anticipating a market bounce. And if we look at something like the SPY, all right, and I'll go back to a daily here. And I don't know why because you remember I drew on these charts all kinds of patterns and they're not showing up today. That's kind of weird. Oh, maybe it was on my SPES. So here's the S&P doing a pretty big pullback up into an area of supply that I was targeting, and you can see I've got a next leg down, and this has to do with impulse versus corrective phases. Now, depending on how you guys view this chart, let me get this moving average off of here. And again, to each their own. I know some of you are going to be like, oh, I don't like that stuff. It doesn't work for me. That's fine. All I'm trying to do is give myself kind of an objective way to look at this. I'm moving as many of these lines as possible on the futures just to give us an idea of patterns. Now, I am a fan of what's called a head and shoulders pattern, which some may view it as being this guy right here. All right, so there's your head and shoulders pattern being drawn out. So you have your left shoulder, the head, the right shoulder, in my mind, being built right now. So if we tend to get a sell-off here and get a little more downside move, we could find ourselves in a situation that even though the numbers say it's negative for the month of January and we are still technically in a bull market, this may be a slight change in that market sentiment. So I will be playing this one. I did not buy puts today. As I told you guys, I will be looking to buy puts once you get back up to that area of what was support is now resistance. So I will show you here. It's kind of, you could draw this line any way you want. I like horizontal lines because it gives me an easier reference point. I know some of you like to do diagonals or at least go through the peaks. So you'd be looking at something like this as your trend line, somewhere in there. Either way, we're pretty much at a point right now where I feel like if I'm going to start shorting, this is a logical starting point. Now, I'm not going to load the boat tomorrow by any stretch of the imagination. I'm going to tiptoe in because we could get another big rally. Let me ask you, why do you guys think we could get another big rally right now? All right, just type it in chat. What are your thoughts on what would be the catalyst or the psychological aspects which could cause this market to rip through this S&P 500 all-time high sitting way up here right around 4,800, right? There's something out there that could rip through this level. And at least I believe could cause it to rip through this level. And I'm just trying to get you guys to think outside the box. GD says, yes, I think the supply zone is a bit higher up, though. Could be, sure. Gotta love dinner. That was a great game. I was bummed that it was on a Sunday, so I had to take it easy last night so I could be all clear for today. Tom says, Kramer manipulation. I like that. I guess you could say Kramer's always a wild card. But remember, who is he impacting? In my mind, he's impacting the retail investor who doesn't have a clue what they're doing. Pretty much like a Wall Street Bets Reddit room. Let's see. Bowing down to Biden and retreat. Not a bad idea. I guess I could do it, but do you really think Putin's going to bow down? I don't think so. I don't think he cares. So I see Big Eb saying good earnings. You've got Christy saying good earnings. Earnings certainly could be one of them. And mind you, this week, guys, you've got some monster names. You have Amazon, you have Google, and you have Facebook reporting this week. Those are all huge names. That's Google is happening tomorrow night after market close. Facebook is Wednesday, and then Thursday is Amazon. So some big FANG stocks reporting. Now, certainly those earnings could push it. Here's why I think the market could rip to an all-time high. And it's thinking a little bit. Let's see. Let me just read you here real quick. And it's right with what Don's saying. Too many people are thinking short. So run it up, take their money, get the bulls excited, and then take their money. That's exactly what I would say. Right now, so many people are now hearing markets correcting, market crashing, bad January, blah, 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 blah. Remember, markets do what people least expect to do is what my mentor told me. So, I don't think it's going to be earnings that push this higher. I think that's not going to work. Why? Because the expectations are that in the next 6 months to year, earnings are definitely going to slow. So I believe the earnings wouldn't be a catalyst to the upside unless there's something so astronomical and Google comes out and says, hey, we got some new products and we're dominating. I just don't see that happening. So I think it'll probably move up to the quote-unquote invisible hand of the markets. And to me, this is the financial markets colluding. Now, collusion is illegal, technically. Fomenting is illegal in the financial markets as well. But what will probably happen is, let's assume that you and I, we're all big-time players in this space, right? We're all market makers and institutional traders. And I'm out there talking to Don and Chris and Joe and GD and Margaret and Christy and saying, hey, listen, until, let's say, February 15th or February 30th, don't sell anything. Let's keep issuing downgrades on things so that people end up dumping their shares, and we'll all be buying, and we'll push that market up to new highs. We will force those people who are selling those shares to jump back in because they're afraid they're going to miss the boat. And then when that happens, probably my guess is going to happen first week of March, then they'll start unloading, because what'll happen is it'll rip to an all-time high, and everybody goes, shoot, son of a biscuit, I missed it. I got to get back in because I can't afford to not be in this next huge move to the upside, and that's when it comes crashing back down. So that is all conjecture and hypothesis at this point on my part, and I think some of you share the same views. But keep careful out there if you're starting to short it. I am looking for short positions. I will start to build some short positions. I still have a couple, but nothing compared to the size that I want to be in if we ultimately do get a systemic market sell-off and crash. That's a good one, Big Eb. Amazon split could be this week announcement. That would certainly be big for Amazon. And if you look at Amazon's chart, boy, now would be the time to add that little pop to your price. That is a pretty significant sell-off. You have this beautiful double top that happened back in November, and all of a sudden, Amazon looking at a pretty significant correction to the tune from peak to trough of down around 28%. Well, market ain't down 28%. Now you're looking at right around a 20% sale. So there you go. Don doesn't think they're splitting for a while. I don't know, man. I think at some point, when you try to get people into the marketplace, now is the time to get people excited. As I mentioned on last week's show, Amazon at $3,000, you're pricing out a lot of Robinhood and Reddit and Wall Street Bets goons. But if you do a 100-to-1 split, how crazy would that be? 100-to-1. I don't think you'll see it. Maybe a 10. Or 20, but even if they do 100-to-1, Amazon would still be $30 per share. And think of it psychologically. Everybody here right now looks at Amazon at $3,000 like, wow, that's expensive. It's not. It's Price is almost irrelevant. You cannot make an assessment of valuation of a company or quote-unquote expensive until you look at the number of outstanding shares and price. Those two numbers together are what give you an assumption or the data to build the assumption that it's overvalued or undervalued. So, just because Amazon's 3,000, that doesn't tell you much at all. What if I told you there was one share of Amazon? Well, that means that share would be over $2 trillion. Well, let's keep splitting it up. You make each share worth a little bit less, and all of a sudden people go, wow, it's cheap. Amazon at $30. Reddit guys would be gobbling this thing up thinking they're getting a deal. It's going to go back to 3,000, which it never will. All right. A split would make Amazon accessible for covered calls. Yes. Certainly make it much easier, right? The prices would be a little bit better. They would probably want to do that in a bullish market and create hype to really, yeah. You never know about the timing of things. I agree. I think 10 to 1, maybe pushing it with a 20 to 1, but I think 10 to 1 is probably the most logical thing. And doing it during an earnings announcement, especially. So let's say Amazon comes out with earnings. If you look at the price chart, I think that they're pricing in earnings slowdown for Amazon, right? Maybe we're actually going out and shopping at retail now. Yay, imagine that. We can all leave our homes. But let's say Amazon reports on Thursday and they say, our earnings are down, 3% year over year. Okay, that's horrible. But then they'll say something like our forecast is, negative because of the economy, because of yada, 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 and rising rates. So we're forecasting a decline next year of 5%. That normally would tank Amazon shares. But how do you bail them out and save it from a big fall? You say, but on March 1st, we're going to do a 20 to 1 reverse split or 20 to 1 split. And then all of a sudden people gobble up those shares and they almost ignore the earnings call. Typical. So I agree with you, Big Eb. I think that if Amazon's going to do it and they're reporting bad news on Thursday, that would be a good time to announce the split. They're obviously very, very lofty in price, but markets will do whatever the heck they need to do. All right, good. So that's something I'm keeping an eye on. Again, as I mentioned, I am going to be building some short positions. I know some of you are like, oh, I'm only bullish. Oh, there you go. There's my ES chart I wanted. A little bit clearer picture there of that kind of head and shoulders pattern I'm looking at. Technically, this would need to come down to here to be a head and shoulders, right? For those that know the pattern, head and shoulders is basically, there you go. Now we've got a good looking head and shoulders, at least a better looking head and shoulders. So that's where I'll be making some plays. We'll see. Probably tomorrow. My guess is you'll probably get some follow-through run-up in the equity markets tomorrow and more bullish upside. So it's going to be the similar picture for the Russell, which turned to that area of demand, although it wasn't a strong area. But nice little reversal the last couple of days. You had the NASDAQ as well. Look at the triple Qs. Obviously having a pretty big bounce, although I don't think they're going to get back up to this 15.4 mark, which you have in blue, or the 15.7 mark that's in red up there. I think that might be a little bit of a stretch. But if we do, that's a sign that those buyers are back. So we are in a pivotal point, in my opinion. I think it's really interesting to look and see kind of what exactly is going on with these markets. What exactly is your trading plan going to be? Mine is 100% shifting to a much more bearish tone, but I have to let that market confirm it to me. I can't just jump out there and short it. All right, so some other questions that came through. Let me go. I have all kinds of stuff that's come through. Glenn asked this one, and I'm sure I've got some people in the room that are in this position. I know Donna is. He says, do you think Netflix will get back up to 510? Well, remember, if we look at the Netflix chart, it is absolutely way oversold in my opinion. That is a monstrous decline in the valuation of Netflix. Now, I don't look at the fundamentals, so I can't really tell you, but if you go from the peak that we had back in November to the bottom we hit day after they reported earnings, that's a 50% slide for Netflix. 50%. I mean, that's pretty significant. Well, do you think it can get back up and close that gap was the question. I absolutely do. Especially when you have somebody like Bill Ackman who's out there, buying tens of millions of dollars worth of Netflix. Yeah, I do think it could get back up there. Now, one thing I like to use, and it's just because I'm weird, I like using fib retracement tools. So if we go fib retracement and go down to these lows, I'm going to move over a little bit. You can see that a 50% retracement closes that gap. It's a little bit higher than the gap. So yes, I do think, Netflix did great today. And again, I think it's bottom fishing. I think a lot of people are going, you know what, Netflix is trading at 380, and it was up at 700. Okay, Netflix is not a bad business. There still are one of the juggernauts out there. So I think a lot of people looking at this as buying the dip, good valuation, just like Ackman, just like Don did the other day. Can it close this gap? Absolutely. Will it? I don't know. Again, I think we have to keep in mind what's going on with this bad boy right here, which is the NASDAQ. If the NASDAQ and markets continue to show weakness, maybe they bounce a little bit, but if they continue to show weakness, Netflix is going to have a much higher time or a much harder time trying to close that gap. Sentiment is everything right now, and if the NASDAQ tanks, let's say 20% from these points, Netflix ain't going to fill it. The market says it can get to 600. Yeah, I agree. I mean, hell, does Netflix get to an all-time high? I don't think Netflix will break an all-time high this year. I don't think you'll see it get above that level, personally. But, we all know anything is possible. But, yes, it could get to 600, but I think you're looking at 615, 610. Close that gap and then reevaluate once we get there. But today was a great start in that. And, one of the rules I like to use for filling gaps, let me get rid of these fibs here. You guys can see that the high from the day they reported earnings on January 21st, the high of that one was about 408.62. So, one of the things I like to do is I'll just set an alert, and I can set an alert on this red line that says if it moves above 408.62, let me know, right? So that's technically a breakout trade. It's breaking out of this island of price from the gap, and therefore moving towards filling that gap. So these are just some things you guys can do on a lot of these platforms. Set alerts. You can just double click on that. No, not double click. I think right up here it says add an alert, right? So you can just go add alert and say if it crosses that price, and then that way you can reevaluate. And if it does do what you think it's going to do, awesome. Go for it. All right. Let me think that one. It's so funny that people know, like I work at OTA, everybody knows that. I've done this show. Actually, I did Power Trading Radio for 1 week shy of 10 years. And people still called me at 3 o'clock in the afternoon when I did the show and like, hey, what are you doing? It's like, I'm on the show. I have a show I've done every day, Monday through Friday for a decade. Same thing now, I got people calling me all the time that I work with like, I have a show right now, right? I'm doing this show and I'm not going to be answering the phone. Anyway. Netflix as a company won't have a day in the sun with weak competition like it did a year. And I'm bearish too, Tom, but I'm bearish, but it's already down 50%, right? So I'm long-term bearish on it because I think there's a lot more competition coming in that space, but I think that this is overdone. I think this is an over knee-jerk reaction to Netflix's move, and I think you'll get a bounce back up. However, let's look at the bigger picture, right? What's it saying on a monthly? You look at the monthly, changes it a lot, right? Let's move away from the COVID piece, which is obviously starting right here in 2020. I mean, we haven't even recovered all the gains from COVID, which is fine. Does it get all the way down to 270? I'll tell you, I'm not even a Netflix fan. If it got to 270, I'd be buying some. I certainly would be buying some, but we'll wait and see. I am just an opinion in the markets. It doesn't really matter what I think. It's really about what the markets give you. Talked with people in my group that, no, I'm about to go live. Yeah, well, the fun of it. And Margaret's right. Deep pockets are buying, Ackman is no slouch. He did mess up with Vertex Software or Vertex Pharmaceuticals a few years back and lost $6 billion, I believe, on that trade. But all in all, he's been doing pretty damn good. So it's an ugly drop, NJ, but, look at some of the other ones. It's not a big drop yet, but Amazon, I mean, that's a pretty significant decline. You look at NVIDIA, right? NVIDIA has a pretty significant, this last month has been ugly for NVIDIA. We looked at Align Technologies. I mean, so there's a lot of big drops in some of these companies. And I think that Shmev Beats is overvalued. Only so many people can get subscriptions. Bearish. Correct. You have a fixed number. It's not like you look at Netflix, right? You don't go, hey, man, I've got the sports package with Netflix. I've got the movie package. Oh, and I've got the cheesy romantic comedy package. But you know what? I heard they're coming out with a daytime sitcom comedy package. So you buy one package and you get it all. So unless they reinvent themselves and give us something else to buy, I agree with you 100%. You're maxed out. I don't know the exact numbers. I'm sure somebody here probably knows them better than I do. The exact numbers of how many U.S. subscribers are using Netflix. And let's be honest, there's a lot of people who are going, hey, I'll buy one Netflix, and then I'll let you, and we'll let 3 friends on it, and we'll all split it. So no longer am I paying $14 a month. I'm now going to pay, $3 a month and split it amongst a bunch of friends, therefore reducing the potential for Netflix for more upside gain. So I agree, Shmev. I think you've got a limited upside here for Netflix. So, but I do think it's oversold. So oversold, probably have a little bit of bounce, and then maybe close that gap, and then we'll see it go further. Joe Little, thank you so much for the contribution, my friend. I do appreciate that. Always nice to get a little contribution to the Friday whiskey fund. Netflix could be a takeover target. Oof. I think it's the other way around. Netflix is too big. I think what Netflix may do is do exactly what I'm saying, is maybe they go out and they start buying other channels. Now, I don't think they would buy Disney, but let's say they did buy somebody like Disney. Now, all of a sudden, they could sell the Netflix subscription, the Disney subscription, and maybe break it apart and say, here's your ESPN subscription, right? That's what Google was trying to do, is split up so you have all these different subscription models, right? Oh, yeah, Roku's getting annihilated. Roku looks really bad. But let's be honest, what was Roku's market share? Were people really rushing out to use Roku? I mean, we use it in the lobby at Online Trading Academy. We had our channel, but at one point it was down 72%. Yeah, Tom, Apple or Disney could buy them. But remember that Netflix is a pretty massive one as well. I think that the market cap of Netflix is bigger than Disney. Ooh, I'm maybe stretching here. Let me just look real quick. Let's go check and see who's got the bigger market cap. I think actually Netflix has a bigger market cap than Disney. Maybe not over the last couple of weeks. Let's go DIS. All right, so Disney's market cap is sitting at $260 billion. Oh, and one versus 189. So Disney is slightly bigger, but there you go. Is Netflix big enough to buy Comcast? Let's go Comcast. Comcast is $228 billion. So these are all relatively the same. Discovery has HBO Max. Yeah. But, I mean, I think that the point's made. Like, if you're a one-trick pony and you're selling one subscription model, great. I'm going to buy it. But I, if you had a sports package with Netflix that got me all the NFL games and NBA games, or even broke those up like NFL Channel does, now they'd have another level to their revenue income. But I just don't see it happening. So, therefore, the bearishness on Netflix. All right. Let me go to, let's see. I had to put this one in here just because it was an odd question. When do you know it's time to get out of the market? Tim. And Tim, you might be new to the show, but, my answer to that one is very easy. Whenever you feel it's time to get out. Right? Whenever it fits your objective. I have a very simple rule for me, which is if markets start making lower lows and lower highs, then I'll consider getting out of my long positions. Because if it's not making higher highs, it's weak. If it starts making lower lows, it's really weak, and therefore that trend may reverse, and now all of a sudden I find myself in a downtrend. Now, we haven't quite put ourselves in that situation yet, but you look at this S&P 500, we could, looking at the daily, start to make the assessment that it's still an uptrend. It really hasn't made a lower low. Now, I apologize for this head and shoulders. I'm going to leave this here for a while, just to see if it does pan out. But you notice that this current low we just had in the middle of January, actually just recently, a couple days ago, I don't know if I would necessarily call that a lower low. It's right at this. So now is the time for it to prove itself. If it makes a higher high, we're still in an uptrend. But if all of a sudden it makes this lower high, which is right around 4,500 on the S&P, and then slowly breaks down below 4,200, now all of a sudden I can say that it is now making lower lows and lower highs. So for me, that would be the time to get out of or at least get out of long positions. Again, it's all subject to your beliefs. I'm not a financial advisor. I think I'm supposed to say at the beginning of every show, this is not meant to be construed as financial advice. Well, it's just education and walking through how to analyze markets. So if we go to, let's look at the triple Qs, and we're still in the same boat. However, it's making lower highs, and it just made a lower low. So now I'm really interested to see what happens over the next week or two with regards to market momentum. Do we rally on the Qs all the way back up to 387? Get it back to the origin of this last rip down? I don't know. And I have no crystal ball. I wish I did, but all I can go off of is history and experience. And say, here's how I'm going to play that one. So Tim, when do you know it's time to get out of the market? For me, it would be if I've got a nice profit on and my trailing stop is being moved up and locking in profit along the way and gets taken out, great. Time to exit out. Now, I think one of the bigger challenges that every one of us is going to have to face, every one. I know that most of you have not been I know most of you have not been trading for 20 plus years, right? In 20 plus years, you've had big bear markets, you've had big bull markets. In the last 13 years, you've had nothing but bull markets, except for one little blip, which you really didn't even have time to prepare for. It just kind of came out of nowhere. Right now, or at some point here in the near future, you're going to start to get those signs that market's rolling over. And the real test of mettle, the test of experience and a real trader is when you can put that long bias behind you and say, now I've got to think about short. Forget about buying anything right now. I'm shorting every single rally that moves up into supply and play that until the market stops making lower highs and lower lows. To me, that is the that is the essence of this, is just timing things out. Yeah, Steve says, not advice, buy. That's Jim Cramer, and he's got a huge disclaimer at the bottom of his page. I think it actually scrolls up, but he's got a huge disclaimer out there to say he's not giving financial advice, but come on. I'm a buyer at this price. He's always giving financial advice. Let's see. Joe Frank says, oil is up and projecting to continue the uptrend up on the back of supply constraints. Can energy be the only sector that doesn't fall to the same tune as major indexes? Well, you're always going to get things that don't follow the herd. So if we look at these charts here, markets have been trending up beautifully, looking a little bit weaker here over the past month. All right, fine. You look at crude oil, it's been in a constant uptrend. I actually was really bearish during this blue box here because it started making on a smaller time frame. What was it doing? It was making lower highs and lower lows. So I was fairly bearish here, and then it proved me wrong and started to rip back up and continue its trend. Once it broke this high, it's like, okay, the bullish hat is back on, and you got to stay with it. I didn't trade it during this bigger sell-off here, but at this point, could it keep going? Absolutely. I do think it's going to continue. It might be one of those shining spots, Joe, where people are like, where do I park my capital? Where do I put my money? Well, what's moving to the upside? Crude oil. Now, the question becomes, where's it going to go? I agree, as many viewers here believe it's going to 100. Why wouldn't it? There really is nothing to stop it other than every car company in the world saying they're going to stop producing, petrol-based vehicles. But, we still use oil and petroleum products in so many different things that it would make sense for this one to keep on continue to the upside until something with OPEC were to change. But remember, if you're OPEC, if you're Russia, expensive oil is great for you. Yes, you may sell less of it, but you make more money because of the cost per barrel. And oil is a finite resource. So at a certain point, Saudi Arabia is going to run out of oil. At a certain point, Russia will run out of oil. Now, that may be decades down the road, but they can calculate out kind of what their supply is. So if you're a business person, would you rather sell a lot of stuff right now at a lower price or less stuff now at much higher prices and keep your supply longer? To me, that is what I think OPEC and Russia are doing. Good on them. So if I'm OPEC, I have zero interest in letting oil fall in price. It makes more sense for it to be higher. Now, the only asterisk there would be the higher that oil gets, and I believe we did this show a couple years ago where we're talking about the frackers in the United States, and I believe it was something like $26 per barrel, somewhere around $26 per barrel is where they didn't make any money. So as long as it's over 26, fracking becomes a viable business in the United States, and there's tons of fracking going on in Texas and Oklahoma and other states. So the higher that gets, the more likely you're going to see industry start to move back into fracking. And of course, that would add more supply to the equation and theoretically start to drop the price of oil. But now you're talking, this is like the domino effect of much higher rising prices. Blockbuster 2.0 is big enough to buy. You saying Netflix is Blockbuster 2.0? So, Tim, that's we went through a lot of different things there about, when is the time to get out of the market. That's all up to you. One of the things I always tell anybody who sends in a question like, hey, what do you think I should do with the stock is, well, what did you think you should do with it? What was your entry, your stop loss, your price target, etc.? Those are the three major things you need to think about with every trade that you make. Okay, what else did I have? This is performance. What other questions you guys have for me? I didn't really get a lot of questions over the weekend. Plus, I haven't really been paying too much attention to my email. But let's see if I got some in here. I'm sure you guys have some things to mention. So let me run through what is going on with regards to announcements for tomorrow and the next day. And I'll wait for a couple questions here before I wrap things up. Let's see. I'm totally out of sync over here. There it is. So here is the earnings for tomorrow, which I'm excited about. There's there's going to be some popcorn trade of the day happening tomorrow, and that's going to happen after the market close. You've got Alibaba reporting earnings tomorrow. You also have AMD, Google, both the A and C shares, which is GOOG and GOOGL. You have ExxonMobil, PayPal, General Motors, Gilead Sciences, and Starbucks. Oh, yes, Starbucks. And that's been one that's over the past month has been pretty ugly. Let's see if I bring up that chart for you guys right now, just so you can take a peek at what's going on with Starbucks. Apparently, people cutting back on those ice mocha frappuccinos. Certainly, last month has been pretty ugly for... there's more Russian spammers. Do not click those Russian links. I will remove them right now. Let's see. Hide user on this channel. Bye. All right. Joe Frank says, right, it just takes time to start rigs. Yep, exactly. Exactly. Take advantage. Kingsley, USO options a possibility? Certainly. Yeah. I mean, there's always an option. You could also be trading options on the futures, right? That's another way to do it. But you look at what's gone on with USO here. I'm kicking myself because I was in... UCO. You guys might remember when the market collapsed. Oh, God. Oh, man. I'm kicking myself. I was actually on this show. You guys, I even showed my positions in my portfolio. I bought this thing down at $12. And it was the only thing I could buy. They cut me off from trading oil futures. They cut me off from trading UCO or any oil product. For some reason, they let me buy this UCO, which is double long crude oil. So it's funny. I bought it at 12, sold out like 18, and I was like, all right, sweet. I'll take 50% gain in just a few days. Oh, just why? Why didn't I hold that? You guys might remember. There's some oldies in here. You guys might remember Ruben Landon Dante, who was just a very interesting character, a little bit of hothead all over the place. Very, very interesting guy. I was saying on the show one time, I'm like, listen. If you ever get the chance to buy oil under $20, load the boat. Oil under $20, it won't go under 20. And all of a sudden we found oil at negative 40 on the futures, and I was trying to buy whatever I could. They just wouldn't let me. Dab nabbit. I did not hear Jen Psaki preparing everyone for a bad jobs report this week. I did not. I try not to follow. I know this sounds kind of weird, but I really don't watch the news. I have sources I go to where I'll look at headlines to see what people are being fed, but I just look at the data and try not to get caught up in people's expectations about them. You're talking Pelosi. Okay. I was talking Psaki. I was like, oh. What else we got? AMD has a good day. Let's check out AMD. Why don't we check out AMD? Oh, man. Good day after a bunch of bad ones. But remember, this AMD, of course, AMD had a good day. If you're looking, probably all chip makers, if you look at SMH, right, this is the whole ETF for semiconductors. Again, it's all had a nice bounce today. I mean, NASDAQ was looking great, right? Obviously, NASDAQ got 3%. You're going to get all tech. Unless it's really a messed up tech company, it's going to bounce today. So, what else we got? Someone knows the numbers. I don't know, Alan. I don't know if someone knows the numbers. I just think that this is the sympathy rally where you're going to see, KLAC, okay, that rallied big. You've got Intel, okay, that rallied a little bit. Well, Intel's been really the dog, which is so weird. It used to be the absolute king of the industry. Now, not so much. All right, what else do I got? Over the long run, I see multiple yellow boxes on the rut lasting a year or more. Do you see a new sideways move forming yet? No, not yet. So let's go to the rut. I don't see it forming yet. And, when you say goes on for years, there are a few of them. Like you saw this one back here in 2019, which was just phenomenal. It just perfectly bounced. It broke up and then had a huge sell-off. Here you have the perfectly sideways that we were watching this one for a long time, ripped to the upside. To me, this yellow box can be removed. It's no longer valid in any way. So it's with tears today. I'm going to have to go. There you go. But, do we start forming one here, Tom? Time will tell. I don't think so. I think you'll probably rally up a little bit more on the Russell and these other indexes, and then you'll start to see more oomph to the south side. You guys remember the other day we talked about impulse versus corrective phases. Right now, their impulses have been aggressive to the downside with corrections smaller to the upside. Clear characteristic of sentiment change. It has been where impulses roll up, small corrections down, next impulse, right? So follow the move, follow the strength, follow where that crowd is going, and don't get trampled by it, but understand their actions. And to me, these impulse and corrective phases right now are really pushing to the downside. Look at Russell. If we go back to its high in November, aggressive sell-off, small pull back up. All right, and then you have this most recent one, aggressive sell-off. We're still determining what that rally up is going to be. Merlin, where's a good place to look at the leading performers in the Russell 2000? Ugh. I wouldn't know that. Not that I wouldn't. There's a couple ways you could do it. I don't have a place to go look specifically for that. You can create your own watch list. Of course, putting in 2,000 different companies makes it tough. You can also go to somebody like, if you have a watch list or software for a watch list, check this out. You go to barchart.com, right, and just type in IWM, right? Hit enter, and then when you scroll down here, it says constituents. Oops, there's constituents, and this will tell me all 2,000 companies in here, right? And one thing I love about the Russell 2000 is notice that the biggest one, the most influential company, this would be a funny Trivial Pursuit question, is Ovintiv. I've never even heard of Ovintiv. Macy's is number 2, BJ's is number 3, but they're only 0.39%, right? Really small amounts. You look at the NASDAQ, S&P, Dow, I mean, they could be very overweighted to one company. So Russell, to me, is one of the best well-diversified indexes. Obviously, you got 2,000. Anyway, that said, you can click download right here and download the entire list of 2,000. So let me show you here real quick. It's going to make me log in. Let's do this, just so I can show you guys, and it should download right away. It'll take a hot minute to get there. Come on. Click download. Oh, download. Oh, that's not good. So you have to pay to get the rest. I guess I can only download the first 1,000 results, which is fine, right? That'll tell you the biggest pieces of it. And then you get these Excel spreadsheets where you just open them up, and you can see all of the different holdings for the ETFs. So this works great for things like XLE, XLF, all the typical ones, the spiders, which usually have 30 to 100 or so components. But this way you could copy this symbol list right here and put it in a watch list if you wanted to. That's the easy way to do it, or at least the way that I would recommend doing it. So there you go, Drew. That's how I would do it. XLF, safe haven. I don't know if I would call anything a safe haven at this point. I know some of you would disagree. That's fine. I just think that right now it's too volatile. In theory, higher rates would mean more money for banks. But as I mentioned before, if the markets fall 50%, it's not like banks are going to soar 30. They might be down 20% or something like that. They're still going to follow the trend of the overall market. So that's how I would play it. I don't think XLF is necessarily the safe haven. And unfortunately, this watch list, I don't know why this is not here. It's a different login or something, but I used to have a whole page of XLF, all of them, all the main main sectors. Energy right now is the darling. And of course, when oil's up 18% for the month, obviously XLE is going to be performing very well. All right. It's just 9 million people were out due to Omicron, and they collected, well, who knows? Again, I really don't trust any of the numbers that come out. I'm just watching price. All right, so I gave you the earnings announcements, which of course was Google is the main one there. I have also economic announcements, but they're out of order. So I wanted to show you guys this one for tomorrow. Is this one for tomorrow? Yes. This is for tomorrow, and that is a lot of manufacturing and service numbers coming out for the world. Lots of European manufacturing numbers. You can see we got manufacturing for the U.S., etc. But you also have for the U.S. JOLTS job openings. You have ISM manufacturing prices. You have construction spending. So keep an eye on these. They're not like the monster movers, right? It really is a little bit later in the week. You'll get some much bigger things happening. But at 10 a.m. Pacific, so that's 30 minutes into the trading day, these numbers come out for the U.S. markets, which could create some moves. All right. Omicron, scratchy throat and slight congestion. You watch that Chiefs game. I don't know if anybody watched the Chiefs game. Oops, where am I at? It's not done. That Chiefs game last night, I don't know how many people fit in Arrowhead, but that was absolutely crazy watching all those people just side by side, no masks, having a great time. Awesome. Kingsley, my goodness, my man. What did I do right today? I got to do that more often. Kingsley, thank you so much. That is extremely nice of you. I appreciate that. That is awesome. If I can help, Kingsley, let me know. Margaret says guest list. I haven't had time to look out and get guests. Right now, I'm really trying to make this the CIL program as robust as I can get it. So I'm trying to add some new things and do some more research. So I've been pretty buried. Plus, I'm immersed in football. But now that my Niners are done, I don't need to worry about that anymore. Because Super Bowl, it'll be fun, but no big Super Bowl party for me. I'll go find something else, somewhere else. No hosting. So Kingsley, again, thank you so much for that. I'm blushing. That was very nice of you. All right, everybody, that's going to do it for me. Tomorrow, since it is the first of the month, I will leave this TraderMerlin@gmail.com just to send me comments and questions. I appreciate those that sent in questions today to kind of steer today's topics. As goes January, so goes the rest of the year. Last few years, I would say no. This year, I think yes. And of course, I already told you my thoughts for the S&P for the year, which were at some point will be down 20%, but I think we'll bounce back near the end and maybe only be down like 15%. But all in all, I think it will be a negative year for the markets. Again, that is not financial advice. That's just me saying, here's what I think, and I'm wrapping my plan around that. And as we go through, I'll show you kind of what positions I'm getting into tomorrow. I should, based on what happens, I should start building some, buying some puts that are deep out of the money because I'll be able to get them real cheap. And if we do get a panic knee-jerk reaction, I get a bigger bang for my buck there. I know, right? It's so funny because in football, guys, he says, too bad Tart couldn't catch that interception. In football, you watch a game, and we're always going like this. We're always going, oh, man, I could have caught that. Realistically, most of us couldn't have caught those balls. But the one by Jaquiski Tart, it hit him in the chest. He watched it, just went bap out of his hands. I'm like, okay, that one, I probably could have caught. I know. Oh, don't get me going, Drew. It was a rough one, but I'm happy we made it to where we made it, and I'm really happy to see Jimmy Garoppolo go to another team. That'd be great. What's the crypto low? Look, I still think we're going lower. That said, I recently bought a lot of crypto. I bought a bunch more for my positions, and I mentioned what some of those were. I can grow up here. Oh, there's... That's so weird. I just had this list up, and these weren't showing, but now they're there. That's so weird. With regards to cryptos, let's see, what did I buy? I bought some Ethereum. I bought some more Matic. I bought some more... What else did I buy? I bought some more Bitcoin. I bought some Algorand. I bought some Chainlink. And I have orders out there for Solana right now. So I still think that there's downside movement. If you look at the Bitcoin price chart here, we have been showing a nice little rally up here, but what did I say about the equity markets? Lower highs, lower lows. Trend is your friend. Well, as much as I love crypto and think it might be the future for financial markets and transacting, it's making lower lows and lower highs. So, it's kind of, I'm going against the trend, but I have a much longer term perspective of this than most. So, does 30,000 still in play? In my opinion, it is still in play. And if it gets to 30, I will buy some more. This is why it's important to always have available capital to be buying into trades that you feel comfortable with. And don't lock all your capital up because it might be an even bigger buying opportunity right around the corner. All right, that said, we are almost at an hour show. Big Eb missed our 1 hour on Friday with Don Fraun. Today is only 50 minutes. I know I'm cutting it close. But again, thank you those who contributed. I do appreciate that. Kingsley and Little Joe, or Joe Little. I got them backwards there. I'm suffering from dyslexia today. Thank you for the contributions. Again, I don't have any guests scheduled this week. I may try to schedule some if I have some time, or if I find people who want to come on and talk about markets. You can always email me at TraderMerlin@gmail.com. Until then, happy trading, everybody. Have fun tomorrow. And it will be, as I mentioned, a popcorn trade of the day. So we'll look at the Google price chart after hours tomorrow. That is going to be a fun one. And just because we didn't look at it today, I'll show you this one right now before I kick everybody out of here, which is Google, still looking pretty strong. It's not as big a decline as we saw with like Netflix or something, but lower lows, lower highs. So my guess is you'll probably see it jump up in the after hours to like 228.50, somewhere in there. Get to these previous highs, which would be a great short point. Anyway, that will do it for me, everybody. I will see you all on tomorrow's show. Take care. Happy trading. Be safe. I'll see you tomorrow.